Last night was FedEx.
Yes.
This was the most impenetrable FedEx conference call I've seen in my 25 years of reading FedEx conference calls.
Let me tell people why as we turn to FedEx, and you can see it right there. The stock is under pressure. It was a slight earnings miss. The bottom line was impacted by worker shortages. That, of course, stemmed from the spread of the Omicron variant.
15%.
Also dealing with what Jim was talking about right at the top of the show, inflation. FedEx President and COO Raj Subramanian discussing those issues last night on the call.
What do you clip?
Especially as the inflation has picked up, and there's obviously consumer spending in February is already down. It's difficult to forecast this environment, but I'm going to tell you that the big period of growth of e-commerce is now behind us, and we are planning, in that perspective, we are confident, even with the mid-single-digit growth to mid to high single-digit growth that Bree was talking about on e-commerce, that we are able to generate positive returns going forward.
All right, Jim. Now, share your thoughts.
Okay, so I was trying to figure out when I was parsing this, I was thinking, okay, now, is he saying that the spend for great internet e-commerce traffic is over? Because in the next sentence, he literally says that he expects 3 to 4 years of excellent e-commerce. So if it's true that the spend is over and he expects 3 to 4 years of e-commerce, then you got to buy the stock. You got to buy the stock. But the convolution of what happened here made me wish for the old Fred Smith. He would come on, basically say, listen, we're doing well or doing not. This was, when I finished it, I finished it like at 10 o'clock at night, and I said, inconclusive. It was an inconclusive conference call. To be done, TBD. There just was not enough in there to decide whether they really think that things are going to get better. They'd say ground is not doing as well. The inflation costs are bad. But the most significant thing was Omicron knocked off 15%. So let's see what happens when everybody comes back.
Yeah.
And so it's a work in progress, WIP.
I know other investors are also curious about succession at the company. That's a key issue. Subramanian was asked about that. He talked about a number of different roles that have been taken on, including the appointment of Mr. Smith's son, Richard, right, who is now leading the Americas region. He was responsible for the vaccine distribution and planning of their global network in this, this is his quote, our very interesting time that we've been through. They're confident Richard's going to take the organization to the next level. But there is a lot of focus from investors on some sort of real succession plan. Perhaps it's Subramanian that is expected to be the heir apparent, but there may be some shareholders who are not convinced of that, Jim.
Do you think Arthur Smith should be?
I don't know. I don't know.
Arthur Smith's the son of Fred.
Yeah, but what about,
Arthur Smith's the coach of the Falcons.
Right, okay.
No, I mean, he's a good coach. I mean, he's got to, I think he has to move on.
Yeah.
He has to move on. The quarterback position. He had Calvin Ridley. That was an interesting guy. Ridley placed bets on games. Not unlike what you tried to do in DraftKings after the first game, and then the second game, the app didn't work.
Right.
Anyway.
This is going to keep coming up, though. Not just FedEx's
No, it is,
results,
but you know what?
not just questions about their ability to actually expand margins. And I've made this point before in terms of the size of the company and from a revenue perspective versus UPS, and then the respective huge gap in market capitalization for the
UPS, which my charitable trust owns, Carol Tomei, had these costs better under control. But there is an upcoming next year union negotiation, which a lot of people feel is going to be one of the great tugs of war
with UPS and its workers.
Shepard Smith here. Thanks for watching CNBC on YouTube.